If only more people knew this strategy, they would be more profitable. Now, I want to discuss the SLK model, structural liquidity key level. But before then, I would want to do a quick recap on CRT or DOL, whatever word you want to use. CRT is what I would call it, candle range theory. Alright, so what is candle range theory all about? It's basically a structure of three candles, three consecutive candles. Now it's sounding like Fair Value Gap, but this is CRT. Three consecutive candles where they are observed a higher time frame. Say if you want to take entry at 1 hour, you observe the DOL at daily time frame for 15 minutes at 4 hour time frame for 1 hour entry at weekly or daily, whatever it is you want to do. That's by the way. So what now is candle range theory? Okay, I'm going to be doing the illustrations here as a textbook diagram before we can go into the charts. Now, so these are three consecutive candles as I've said, and it's the condition where the previous candle, which is the first, maybe the first day, let's say the first day now, the previous day candle was formed and then leaves a wick right below here. You get, and then the next candle that forms, that's the following day, the next candle that forms the following day, basically closes within the body of the previous candle, but then the wick took out the wick of the previous candle. You get, that's the previous day high. It took out the previous day high and then closed below. Alright, so this basically signifies a buy rejection and then a sell momentum. You get, so then the previous candle that forms the other day, probably this is the third day now that you now find your entry. Now, originally, how this occurs is when you see candle 1 and candle 2 and you've observed, and very importantly, this must form on a key level. It's not when you find it in between the trend, between a trend and you feel like it's drawn liquidity. No, that's where you get it wrong. It must form on a key level. You must observe GOL on a key level so that you can find out where the market is going next, and then how you're going to respond to it. So this is previous day candle and then the other one snipes it out. So when this two is formed, you basically wait and observe what the previous day, what the next day candle will do. So let's say this candle now. Okay, already you're going to take your entry from here because you're targeting this low, the previous day low. So you're just going to go down to a low, much more lower time frame. Observe the breaks at this day candle, at this zone. Observe what the market did at this zone before it closed, by the way, and then as it came back down to this area now, basically observe what the market did, what happened here. So at this point now is where you're looking to take entries. Say it created a little bit lower time frame entry like this, you can then get involved, then sell. Alright, so I think this basically explains the concept of candle range theory. Now, I don't think I need to reiterate, but let's just allow it at this. Now, before we continue, if you've not subscribed, do want to subscribe, like, and share this video to get to as many persons as is possible, because there is a lot of information to be captured within this video. Alright, so that is on CRT, which is candle range theory. Alright, okay, so CRT, this is on CRT. Now, to the big fish, the main thing we want to discuss, structural liquidity key level, SLK. Now, SLK strategy or SLK structures are very important to know because it basically modifies and enhances your trades. Now, I would recommend personally SMC and SLK, okay, because basically they are almost the same thing. It's just a few modifications in the terminologies and other things. So we have this buy structure, okay, this buy movement. Already the structure is what is the market doing at the moment. Is it on an uptrend? That's for the structure. Is it on an uptrend or Is the market being bullish? I mean bearish? Is it on a downtrend? You get, is it on a downtrend? What is the market doing at that particular time? Or also, is it just wasting our time like USCHF? USCHF just likes delaying people's entries. So is it just wasting our time ranging and being like support and resistance traders? So what exactly is the market doing at the moment? So if you observe what the market is doing, then you can probably find your entry. Now, many of the mistakes many traders make is they do not know the market structure. They trade against the trend. I would say the trend is your friend. Do not go against the trend. So many persons basically make the mistake of going against the trend. You don't have any pure issues. It's basically the wrong trend. And I'm a victim of it. I won't lie. I will actually say I have at some times gone against the trend, probably because of short-sightedness. I didn't see the bigger picture. All right. So this is structure. We're already on the structure, up, down, or ranging markets. Now, liquidity. Liquidity is very, very, very important. I can't emphasize the importance of liquidity because liquidity basically moves the market. That is what moves the market. You must know where the market is going to and where it's coming from. You must know where it's targeting, where is liquidity zones. Just like explained in CRT, this area now was the liquidity zone. This area was swept. So yes, it's liquidity, momentum has been built, and then a dump. Alright, much like power of tree, accumulation, manipulation, and distribution. If you scroll down, you would see the video. You still need to know that one, much like power of tree. Alright, so liquidity, what zones are being targeted to be taken out, and then you avoid being on those zones is basically simple. You get, avoid being on zones that are being targeted. Okay, so what liquidities do we have? We have internal range liquidity, we have transactional liquidity, we have engineered liquidity, we have inducement as liquidity. All right, we have a whole lot of the external range liquidity, just like here is the external range liquidity. All right. uh, So we have way lots of liquidity, and you must be able to know which one is which and where should I enter to join the market once others has been taken out. Very simple. All right. So just like me this week, I was used as liquidity. Not gonna lie, I was used as liquidity. So let's proceed. Then what's the next one? The next one is key level. Now these are problems that I'm identifying now. You have to identify the problem first before you find the solution. You get, so there are a lot of key levels within this trend. Okay, let's start marking them out. Although this was a failure swing at this point, this was a failure swing, so we can't categorize here as a key level because it didn't break structure. Okay, but this zone now can be a key level, and it was mitigated. Also, the synergy or synergism of key level and liquidity. You see here, here was a liquid zone and it was mitigated. And many people might have thought, okay, yes, the market is now moving. And then an engineered liquidity was created and it was taken out. So yes, this is also a synergism between liquidity and key level. So this was a key level. Yeah, we're about key level now. This was a key level. And for people that have key level troubles, that cannot identify their key levels, you'll probably be sniped out at this point. Okay, so this is a key level. Many people might have taken their entry. This is also a key level. Another batch of people might have taken their entry. Now, for people that have the wrong bias, that have the wrong market direction, they're probably looking at this place as key level for a buy, which eventually they'll be taken out, which is the real truth. They'll still be looking at this place for a buy because they would say, since there is a swing failure, there's probably going to be a retest and all those ones and all those ones. They will still be the liquidity. They will still be the liquidity, and eventually the market will just break through and keep buying. So eventually this is what's going to happen. But then they are at the wrong side of the market, so they should join others. Alright, so structure, liquidity, key level. Very, very, very important. Structure, liquidity, key level. Alright. This alone guarantees you profit. I'm not going to lie. This alone guarantees you massive profits if you learn and understand it. Alright, so this is textbook diagram. Let's now get down into the chart. I think we'll start from the, what's the name again? The drawn liquidity or the candle rate theory before we proceed. So I'll be using the daily time frame to get my drawn liquidity for this particular pair. Alright. So I'm looking for a proper example. I think I would use this. Yeah, I think I would use here. Then we'll still find others. So just as I said, make sure that the drawn liquidity is formed on a key level. You get, make sure it's formed on a key level. So this was a key level, daily time frame key level. Now, if you find out that this sell candle closed at this point, and then what did the next buy candle do? It basically created a wick, created this wick, right? Created this wick that was swept by the market. That is, this low was swept by this wick. And then what was next thing the market did? Now, if you remember in our textbook diagram, I said that you're going to get involved in your third candle. So what was the next thing the market did? Basically came back down, mitigated, and moved. Now, for people that wanted to take their entry from their profits here, you're still in solid profits because this is the previous day high. So yes, you're still in serious profits. Then set a stop loss slightly below, and you're doing so well. Alright, so this is for candle range theory. Now for those that would now set their entries at this point, solid, superb, very nice, marvelous. Alright, so here also is a proper example of that candle range theory. You see, this was the previous candle and then left a week and the market came, took it out, continuation. These things form over and over and over again on key levels. Same thing with this place. This is a buy here. Basic stuff, very basic stuff. Swept and continuation. Same thing here. Swept and continuation. These are all daily time frame key levels. Basic stuff. Alright, so that is all for key levels. I think it's very understandable. Go to your charts, backtest, learn, practice, and you're good to go. Now where is my chart so I can proceed? Alright. So yes, we are now on structure, key level, and liquidity. So just as you said about structure, the structure, uptrends, downtrends, ranging market, lots of it. So this is the structure, an uptrend structure per se. You get an uptrend structure. And then this is the liquidity zones. There is a lot of liquidity in this particular chart, both in the buy side and in the upside. By the way, we have buy side liquidity and sell side liquidity. I do not include it. This is the buy side liquidity. Alright. Then this is the sell side liquidity. So in every side and every part of the market, you must find the liquidity. It's always there. So we also have inducements and this area. So these areas are the key levels where many persons might have bought into for a sell or per se. Then this key level first, this key level second, and eventually the market decided to take everything out. Use all of us as liquidity, and then got to this key level. The importance of key level cannot be overemphasized. By the way, there are hierarchy to these things, but I think we'll just leave it for another video so I don't give out all the information in one video. Alright, so mitigated here and boom, continuation to the upside. Very solid structure, very solid structure. But then an understanding that the market is dynamic. Yes, let me put dynamic. The market is dynamic. It could actually, from this area now, form a change of character. Then you're now seeing sales. So it's very possible. So just look out for the charts and know what's going to do so that you yourself, you don't get caught at the wrong side of the market. Alright, so if you watched to this point, I believe this video has been impactful. So do also like, subscribe, leave a comment. What do you want us to discuss next? What are you finding troubles with? Just whatsoever it is, random stuff. This is a this is a class, so you can immediately ask your questions so that in the next video to be attended to. Now, thank you for watching and see you in the next